been denied. But moving on, and there has been a trade agreement in place between the United States and China following tit-for-tat tariffs. An agreement has been reached between the world's top two economies. Stocks and markets have surged on Monday after the US and China agreed to slash steep tariffs for at least 90 days, tapping the brakes on a trade war between China and the United States amid fears of a global recession. But the temporary pause has reportedly done little to address the underlying schisms that led to the dispute, including the US trade deficit with China and US President Donald Trump's demand for more action from Beijing to combat the US fentanyl crisis. According to reports, under the temporary truce, the US will cut extra tariffs it imposed on Chinese imports last month from 145% to just 30% for the next 3 months, while Chinese duties on US imports will fall to 10% from 125. Moreover, US Trade Representative Jamieson Greer said in an interview that in addition to the tariff reductions, China has agreed to lift export countermeasures issued after April the 2nd, including restrictions on rare earth minerals and magnets used widely in high-tech manufacturing. Meanwhile, financial markets cheered the reprieve in the conflict as Wall Street stocks finished sharply higher, with the S&P 500 closing at its highest level since March the 3rd and the tech-heavy Nasdaq Composite recording its highest close since February the 28th. Here is what Scott Bessent and Jamieson Greer have had to say.
We have reached an agreement on a 90-day pause and substantially moved down the tariff levels. Both sides on the reciprocal tariffs will move their tariffs down 115%. Just like with all our other trading partners, as long as there is good faith effort, engagement, and constructive dialogue, then we will keep moving forward.
Our 10% global baseline tariff, which we have on other countries. We have, in addition to that, previous measures that we've retained, which have been, frankly, effective in reducing the U.S. bilateral trade deficit with China over the past few years. So that leaves us in a very good position all in with respect to measures on Chinese imports, but more importantly, leaves us in a constructive path forward to have a positive conversation with it.
Well, meanwhile, Donald Trump has also said that he expects to speak to China's President Xi Jinping at the end of the week. What did Trump say?
Talks in Geneva were very friendly. The relationship is very good. We're not looking to hurt China. China was being hurt very badly. They were closing up factories. They were having a lot of unrest. And they were very happy to be able to do something with us. And the relationship is very, very good. I'll speak to President Xi maybe at the end of the week. We have some other things we're doing.
Well, joining us to discuss all of these latest developments is Dr. Jayjit Bhattacharya, President of the Centre for Digital Economic Policy Research, joining us from New Delhi. Dr. Bhattacharya, thank you ever so much for being here. Let's talk about first the significance of these steep tariff reductions. Of course, global markets have had their reactions. What do you expect to come from the next days and weeks following this big shift from both the United States and China?
I think first we need to keep in mind that this relaxation is only for a period of 90 days, starting from May 14. So we need to really see how it unfolds, because this is not the end of the conversations on the trade deal between US and China. But clearly what had happened was that much of global trade had come to a grinding halt because of astronomical tariffs being put in by both sides. Now, because of the trade deal, albeit temporary in that sense, the tariffs on China by US has been brought down to 30% from some obnoxious 145% that it was earlier. And similarly, China has reduced the tariffs on US to 10%, down from the 125% it had put in. In fact, China had come back and said, we will not increase the tariff any further from 125% because that's meaningless. At 125%, all trade stops. and therefore there's no need to increase the tariff. So what has really happened is that now we have started having the trade. Now it's also a signal that things will go back to normal. Now the point is that will it be a new normal or will it be back to what it was before all this trade fracas started off? And from all signs that we see, it seems to be gliding back to what it was before all of this fracas started off. The other collateral implication is that China was dumping quite rampantly during this period when it was not able to send its goods to US, and therefore economies such as the Indian economy, the Vietnamese, the Indonesian, and so on, were suffering majorly because of the severe dumping that China was indulging in. In fact, then if you look at India, there were products like KTB, there were products like TDQ, insoluble sulfur, PX13, which were completely massacred because of the dumping from China. What it's going to be interesting to see is if China rolls back this dumping, or will it continue to do dumping in all these other economies to degrade their capacities to manufacture chemicals and other manufactured products. And I think that'll be an interesting note to see. Also, we need to see what exactly will be the final contours of the US-China trade agreement, because at the end of the day, the whole raza datra of the US slapping these tariffs was to reduce the trade deficit between China and US. It doesn't look like that has happened, and therefore it'll be interesting to see what is the final deal after 90 days.
Yes, Dr. Bhattacharya, I'm glad that you brought that point up at the end because, of course, Trump's tariff action, Trump's Liberation Day, those images of him holding the board up with all of the countries and the reciprocal tariffs that they would be facing. Given that you've said already there, it seems like the trade imbalances haven't been resolved in the way Trump wanted. Do you think that this, for Trump, has been somewhat of a failure?
It's too early to pass a judgment. I'm sure there'll be some benefit coming to US. I'm sure there are finer texts that'll be emerging. And also, as I said, the final agreement will be in the next 90 days. So it'll all depend on what the finer texts are, what the final agreement is. But from what we see as of now, as of today, it does look like US did not gain much out of this disruption that happened for the last month or so. And therefore, perhaps they did not gain much out of it. Also, the fact that it seems that US blinked first, and I think on your channel I'd mentioned earlier that for a democracy to hold on to a position which is impacting its citizens and businesses is very, very difficult. And therefore, predictably, the US blinked first as per all the media reports. And hence, the deal that one gets because of blinking first is always not as good as one is looking forward to, and therefore, there is a handicap that US is having in its negotiations with China.
Absolutely. And Dr. Bhattacharya, to bring an end to our discussion, Donald Trump signalling that there may be a conversation with Chinese President Xi Jinping coming soon. What's the significance for the ongoing trade discussions and tensions, but also the wider geopolitical situation, given the fact that there have been tensions between China and the US?
I think from the geopolitical perspective, China has identified US as its adversary. And I think the vice versa position has also been taken. And that being one of the key drivers for US to withdraw out of Afghanistan under Trump 1 regime, as they wanted to focus their resources on what they said as one single adversary. So clearly they have entrenched positions. Clearly they see that they cannot establish their global hegemony in the presence of the other power. So therefore they are in a way locked in a conflict situation, while they still need to manage that the conflict does not lead to their domestic impact, or if I say degradation in that sense, because by disrupting the trade, it's impacting the producers in China for sure. They are in the brink, but it's also impacting the consumers in US because the shelves are going empty and the prices will very quickly start going up. And that's something that a democratic country cannot manage. And also from the jobs perspective in China, the whole deal with the Communist Party of China and its people was to ensure that there is prosperity, such sudden reduction in prosperity would surely will surely hurt the Chinese Communist Party's position within China.
Dr. Jayjat Bhattacharya, thank you very much for joining us on NewsX World once again. That is unfortunately all that we have time for, but we will continue to bring you all the latest